If you own a bar or a restaurant, listen up. There is a massive risk hiding in plain sight that could literally bankrupt you overnight. We're talking about liquor liability. And trust me, understanding it is absolutely critical. So in the next few minutes, we're going to break down exactly what this is and more importantly, how you can protect yourself.
I know it sounds dramatic, but let me ask you this directly. Could one single drink, served to the wrong person at the wrong time, completely unravel everything you've worked so hard to build? The answer, unfortunately, is a resounding yes.
Just picture this for a second, because it's an all-too-common scenario. A customer leaves your place, seems fine, but then gets behind the wheel and causes a horrible, catastrophic accident. The next thing you know, your business is slapped with a multi-million-dollar lawsuit. This, right here, is the reality of liquor liability.
Now, I know what you're probably thinking. Hey, I've got general liability insurance. I'm covered for accidents, right? Well, here's the thing you have to understand. That standard policy has a massive, glaring blind spot when it comes to serving alcohol.
It is so important to get the difference here. Your general liability, that covers things that happen on your property. You know, someone slips and falls, or a server spills hot coffee on a customer. But liquor liability, that's a whole different beast. It's specifically for what happens after a patron leaves your establishment, the damage they cause to someone else because they were overserved at your business.
And here is the kicker. This is the detail that trips up so many business owners. If you are in the business of selling alcohol, and I mean for a charge, your standard general liability policy almost certainly has something called a liquor liability exclusion. That's the fine print that says the moment a patron causes harm off-site because they were drunk, your standard policy basically just waves goodbye and is no help at all.
So why are you responsible for what someone does after they leave? Well, the legal reason is something called Dram Shop laws. These are laws at the state level that basically say, hey, business owner, you are financially on the hook for the damage and injuries caused by your drunk customers. It extends your responsibility way, way beyond your front door.
Okay, so what are the most common ways that businesses find themselves in this kind of disastrous mess? Well, it usually boils down to two really big, high-stakes violations.
First, you've got the classic Dram Shop claim. You serve a drink to someone who is already visibly intoxicated. If that person then goes out and hurts someone, your business is directly in the line of fire. But the second one, oh man, this one is arguably even more dangerous. Serving a minor. Even if you have the best ID scanners in the world, one single mistake that leads to an injury or, God forbid, a death will result in an almost guaranteed lawsuit. Not to mention the massive fines you're going to get from the state.
But look, the danger doesn't just stop with the potential lawsuit verdict. The financial damage goes so much deeper. There are all these hidden costs that can absolutely cripple a business, even if you end up winning the case in the end.
Just think about it. The cost to simply defend your business in court can be astronomical. We're talking easily 6 figures. And beyond that, a major violation can lead to state authorities suspending or even revoking your liquor license. For most bars and restaurants, that is a death sentence. Game over.
Okay, so we have established that the risk is absolutely enormous. I get it, it's scary stuff. So now, let's talk about the solution. How do we fix this? Protecting your business really requires a proactive, two-pronged attack that combines the right insurance with smart, on-the-ground policies.
The absolute cornerstone of your defense, the #1 non-negotiable thing you need is a dedicated liquor liability policy. This is not a luxury, folks. It's a necessity. But just having a policy isn't quite enough. You need to make sure the limits are high enough to withstand a truly catastrophic event. We're often talking about a minimum of $1 million in coverage to start.
Now, insurance is your safety net, but you have to actively manage your risk on the floor every single day. This means training your entire staff in a certified program like TIPS. It means creating a culture where it's just standard procedure to document every single time you refuse to serve someone. That paper trail can be invaluable in a lawsuit. You got to make sure managers are always involved in those tough cutoff decisions, and you should maintain a clear, updated list of patrons who should not be served. These steps don't just reduce your risk, they prove you're a responsible operator.
So I'll just leave you with this one question to really think about. After everything we've just covered, can you say with 100% certainty that your business is fully protected against what is likely its biggest, most catastrophic blind spot? Because if you're not absolutely sure, you're exposed.